I can't let nothing get in my way. I know you hear me when I pray. I know that I'm not perfect, yeah, I make mistakes. I need you to be there for me every step of the way, yeah. Cause there's a blessing with my name on it. Hey, you know that I need it, Lord. Show me how to get it, Lord. I'm barely eating, Lord. Trying to feed my people, Lord, yeah. Cause there's a blessing with my name on it. Ooh, hey, you know I receive it, yeah. I believe it, yeah. This year will be my year. I claim it, hey, yeah, I claim. Oh, yeah, yeah. This year will be my year. I claim it, yeah, I claim it. This year will be my year, yeah. I've been putting work in, yeah. Tryna make my dreams come true. I know I get impatient. My family and my babies, they waiting on me to come through. Pressure on every level. Issues, I got several. Trying not to settle. I wanna be successful.
Yes, I know there's a blessing with my name on it. It's not just a blessing. There's so many blessings with my name on it. And I am going to receive them. How about you?
Yes, honey, every last one of them wide open for it.
Wide open and forward. Y'all know what time it is. It is Empowered Mornings. And we are super excited to have you here. Wake up, wake up, wake up, wake up. We are happy to be here. Go ahead and get it out of the way. Go ahead and share your 4. I know our faithfuls are already here. Patricia is already in the house. Miss Doris is already in the house. Our faithful people, and we thank you for being so faithful. We truly are grateful to have you a part of our winning team, because all we do what, y'all?
It's win, no matter what.
No matter what. I wish you would try to tell me I'm not going to win. I wish you would, because the more you say it, the more the winning points just keep on coming. So we are super excited to have you all here this morning. And today we have a special gift for you. I know you used to hearing the big mouth on Thursday, but we're going to change it up a little bit, because wisdom is the key to success. We can't just win in life and not win in our money, and not win in our retirement, and not win in our mortgage. We have to win in every area. So you know what Empower Morning Show does? We bring you the experts. So today is no different. We are bringing the expert, and I am biased because she is my friend. She is not just a special guest, but she is a true friend. We have been friends for so many years. Do not ask her any questions, because she know background about me, okay?
Look, I was gonna slide in a question about Missy now.
Don't bring Missy up. Missy has been healed, delivered, and set free.
Set free. Okay, gotcha.
Yes.
Okay.
So I'm super excited to introduce to you all Tasha Bay. She is a newlywed. She just got married. And I remember she said, I ain't getting married again. I ain't doing that mess again. I'm done and over with. I ain't getting married. But she is a newlywed married woman. She was the person that got me into the mortgage world. I purchased all my homes through Tasha, not through her, like her background is loan officer. She is underwriting. So anything with mortgage, she has done it. And then she went into financial advancement. Like, she's all about money. Any way you can make money, Tasha has researched it, investigated, dig it out. If you have 10 cents, she's going to show you how to make them 10 cents turn into 10,000, because that's what she do. So Tasha, we're going to go ahead and let you take over at this time. Go ahead, girl. Tell them about you.
Good morning, everybody. I just first off want to say thank you all so much for having me. This is such a pleasure and such a privilege, and I cannot be more and more thankful than for you lovely ladies to bring me onto this stage and give me the opportunity to be able to speak to so many people at one time, trusting me with the people that you reach out to weekly and daily. So I take it not for granted. Definitely want to say thank you again for bringing me on today. So, just to talk a little bit of background, of course, Sparkle did share with you guys that I was in the mortgage business, and that is my history for the past 26 years. I originated loans during that time. She was purchasing her first home as well, but I did that for around 11 years. But I don't know if you guys remember that horrible financial crisis that we had back in 2008. Markets crashed, over 3,000 banks failed. We had to go in, government bailouts, buyouts, even Lehman Brothers. They ceased to exist and nobody thought that they were going away. So it was during that time I decided maybe sales isn't going to be where I need to continue to be in this industry. Let me go ahead and make some changes. And I transitioned into underwriting at that time, which was always my goal. So at that point, I then became the person who would actually determine whether or not you could be approved or denied for your mortgage loan. So after years of training, I have government endorsements from HUD and VA, USDA, any state bond programs that help buyers with down payment assistance. I've underwritten those for Nevada, Virginia, Tennessee, Georgia, Missouri, all kinds of states and their state programs. So very familiar with a lot of that. In my ability to determine whether or not families can actually shoulder large masses of debt into their financial structure that they already have, it only made sense that I kind of transitioned into where I am now, which is to be a financial strategist. Because, of course, as things were continuing to come across my desk, I was still seeing a lot of the places where I can tell that financial education and financial literacy is not at the forefront of what's going on in our society today, right? And it's weird, isn't it? Money. Everybody has to have it. Everybody has to use it. And, I find it ironic to know that we as a culture, and when I say as a culture, I do mean melanated folk on this land here in this US. Did you guys know that we are actually bringing in $1.3 trillion in gross national income?
Wow.
Yeah. But we still lag behind every other cultural group in the United States for wealth, for long-term wealth, even with all that earning power that we have. So, what is the link between that? It's definitely going to be what we're doing with the money. Why are we not able to establish generational wealth, legacy wealth for our families? What is missing? And it became very clear to me that what's missing is a financial education. We don't take the time because we get busy, right? There's some things that you don't realize that you need to do until something major happens. And of course, once GoFundMe came on the scene and we started seeing people raising money more and more to be able to bury our loved ones, I thought to myself, if we have to put Ray Ray and Junebug away with another GoFundMe or Fresh Fry, I'm going to really, I'm going to have a whole come apart.
Exactly.
So it was at that point that I went ahead and acquired some additional financial licenses on top of the licenses and certifications that I already have in this space so that I can become, licensed legally to qualify to talk to people about these particular types of issues. One of the things, just a couple of statistics I do want to share before I go into a couple of things, because these things really are impactful. And I think if we understand and actually bring those out, then it'll help us to begin to understand the kinds of things that we need to be doing. So number one, are you guys aware that the black dollar averagely stays in our community only 6 hours? 6 hours before we turn our money over to another ethnic group's businesses. What can we do to become more impactful in that way, supporting one another more in business? 6 hours is sad, y'all. The closest ethnic group next to us, their money is staying in their community for around 18 days compared to our 6 hours. So that's one statistic that really brought me down. Only 9.5% or about 2.6 US businesses are actually Black owned or person of color owned. Out of all of the businesses that are here in this country, out of everybody that is out here circulating credits and making money, we are only 9.5% of that. What kind of things are we learning? What kind of things are we passing on to our babies to help them understand what they're going to be able to have to do in this next level of life? And with what inflation rates and recession have been doing to us since COVID,
Mm.
prime example, just to give you really, really quick statistics on this, because I want to actually have average numbers to make sure that we understand this. Only about, when we're talking about actual income in our country, I'd say between April of 2022 and April of 2023, the average income only went up 0.5%. 0.5%. And
Wow.
this is according to the Bureau of Labor Statistics. However, 44% of all Americans spent more money, while only 33% of all Americans actually made more money. So what is that telling us? These are for the same goods. It's not that we were actually going out and spending more money, right? It's that the cost of goods and services has increased. The cost of tuitions have increased. The cost of gas has increased. It's everything across the board. Yet only a third of us received any type of income bump, and it only averaged 0.5%. Inflation was over a little right at 6%. In December of 2023, inflation was right at 6%. What are we going to continue to do to be impactful? What can we do with our money to start to change the trajectory of what our financial lives look like? So that's one of the things that I definitely take to heart, because now I know the things that we need to start teaching. I had an opportunity to sit down with Sparkle not long ago and share some information with her just about some quick tips that can help you with being able to make better decisions about some of the financial tools that you may want to use to grow your money. One of which is called the Rule of 72. Are you any of you ladies familiar with the Rule of 72 and the way it affects compound interest? Okay. Awesome. See, that's wonderful, because so many people that I get the opportunity to actually sit down with are unaware that this is a key in helping you be able to determine, hey, if I choose a CD at the bank and that CD is only paying me 4%, how long will it take me to double my money using that CD if I drop $5,000 in here, right? Well, really quick, just so that everyone can know, the number 72 sets the basis. There's a mathematical formula. We call it the Rule of 72, and it was developed by Albert Einstein. When he came up with this formula, his end goal was to be able to determine the approximate amount of time it would take him to double his income using a particular financial asset or tool. What he learned was that if you divided the rate of return or the yield rate, whatever you want to call it, that you are receiving for that financial asset into the number 72, you could approximately gauge how long it's going to take you to double your money. So for instance, you drop $5,000 in a CD at 4%, it's going to take you 18 years to double that. 18 years. I don't know about y'all, but I don't really have
18 years to wait.
Listen, no, don't have it. I need to look for rates of higher return. And then it got me thinking, okay, well, where are the rates of higher return? Right? Because if we want a good, safe, fixed account, usually the rates of return on that are going to be, low, maybe 0 to 5%. Of course, the stock market's always an option, but then there's the risk that's involved, right? We don't have any protection for our principal investment there. So while we can, get great rates of return in the stock market, we may not necessarily be able to protect ourselves or get out of the market quick enough if something adverse was to happen. You know what I'm saying? Trying to get your broker on the phone, trying to get in there last minute if you're a day trader and get those options sold in time to recover and not lose too much. So what can we do to be able to start to strengthen that? So of course, I'm a big reader. Tanika, listen, I'm about to call you Tanika. Sparkle can tell you.
It's all my name.
I'm a big reader. So, I thought to myself, John D. Rockefeller's grandchildren, they know him. His grandchildren, his great-great-grandchildren, his great-great-grandchildren, 4 or 5 generations down, they're very aware of who he is. And do you know why that is? It's because what he was able to establish for them when they made him break up the Standard Trust Oil Company. The number of companies that he was able to set up and the number of additional trusts that he was able to set up to keep running his family and be able to fuel what we like to refer to as a family vault. And the way that he was able to do that was through cash value savings attached to a death benefit. We call it life insurance with cash value. This can be done in the form of whole life insurance. This can be done in the form of indexing. This can be done with being able to use also a trust. You can have a trust open and have your trust be the beneficiary of the insurance policy of every single person in your family. Say that you pass away, right? The trust receives those benefits. You realize that Rockefeller set that trust up and he insured everybody in his family. So when everyone passes away, what happens? The trust fuels the family vault, right? I
Mm-hmm.
mean, that policy fuels that family vault. So it doesn't matter who it is. He's able to take care of his family generationally because he does that. We don't really get the opportunity to sit down and talk with people that help us learn about structures and entities that can help us be powerful in the way that we set our family's finances up. Imagine when we had Big Mama and Big Daddy's here, right? We had Big Mama, Big Daddy, we had all the aunties, we were still a Sunday family gathering. What if at any one time anybody had thought in all of those years when we were growing up, somebody, we need to learn what a trust is and how to set one
Yeah.
up, and the fact that we could have set one up and funded it with an insurance policy, or set one up and funded it with $10 if we wanted to.
Mm-hmm.
And then we insured everybody sitting around the table. And as each one passed, it funded the family vault that we're all beneficiaries of. And then maybe that family vault, paid for everybody to go to college. Or maybe it paid for everybody's first home, right? Or it
Mm-hmm.
gave everybody the down payment. Or maybe it pays all of our monthly expenses. These are the types of things that the Rockefellers were doing. And there's a great book, and the name of the book is What Would the Rockefellers Do? It's going to give you some of these principles to be able to understand how they are able to set this mechanism up and work effectively to generate long-term legacy wealth, right? And then, of course, when it comes to actually setting up trust, just so everyone knows, when you do set your trust up, you don't necessarily have to set your trust up in the state that you reside in. Your trust situs can live in another state. Did you know there are 10 majorly advantageous states throughout our country in which to set your private trust structure up in?
Mm-hmm.
So there's by doing that, you may get additional tax benefits, ultimate privacy, lifelong consistency. Yes, the book, What Would the Rockefellers Do? Absolutely. One of the best reads, one of the absolute best reads. Another book that I'm a very high advocate of when it comes to learning more about using these principles, specifically with one particular insurance product that we call an index uniform life insurance policy, is called the Laser Fund. The author of the book is Doug Andrews, and you can go on to the laserfund.com and order that book. It is absolutely amazing. Now, I will tell you, it is a technical book. So, you may need to read a couple of parts of it a couple of times to really be able to digest it and take it in. But Doug does an amazing job of breaking down all of the concepts when it comes to indexing growth, how it works, how the policy works, what's fueling the policy to be able to fuel that growth over time. Those accounts are performing with average rates of 8 to 10% on average. Some years it's even as high as 12%. So now that we know that, we need to also understand that when we are saving our money or choosing tools for which to save our money in, what you want to definitely be looking for are things that are going to outpace inflation. Now, I just mentioned a little while ago that year-ending inflation rates were around 6%. When I was checking it the other day, we're back down in the threes. But if I'm growing my money for long-term use, 20, 30 years down the line, right? Because I don't want to work. The last thing I want to be doing is working the day before I pass.
Exactly.
Unfortunately, that's becoming a reality for so many more people. Now that the government has extended the age of retirement to 73, right? A lot of people are expecting to work through that time. You're not even getting an opportunity to enjoy your life at that point.
Mm-mm.
So knowing that, do I want to grow my money in a fixed account where I'm only getting around 3 or 4% return when that's exactly where I am with inflation right now? My money's not outpacing inflation. It's very possible that inflation can outpace my money. And then I'm really going to be upside down when it comes to the retirement game. This is why you see so many people announce their retirement. We get all happy and ecstatic for them. And the next thing you know, you see them being a greeter at Walmart. Well, girl, I thought you retired. That girl, I was bored sitting at home. No, you wasn't bored sitting at home. You had to get on in here and get these people so that you could be making a little bit more cash. So, I mean, and there's nothing wrong with it because we
It's
got to
not.
eat. It's nothing wrong. You do what you got to do. That's, if anybody doesn't know that, I think that we definitely all probably understand that doing what you have to do, whether it means feeding your kids, feeding your family, feeding yourself, you're going to get out there and you're going to put the pedal to the metal and make it happen. So in light of that, going back to the index universal life policy, we definitely need to be looking at these tips and tools that give us this added boost to our money. I was speaking with someone not long ago and they were anticipating paying their house off early. And I said, okay, well, what's your interest rate? Well, they refinance. The interest rate is around, 3.75%. So they got one of those good rates during the time when rates were low. And they were wanting to go ahead and start paying around an extra $2,000 a month on their mortgage to start paying their mortgage down more quickly. And I'm like, okay, so of course, this person's gainfully employed. They're working now. I said, so let's just put this into perspective and let's see what happens if you start paying that $2,000 more a month on your mortgage now. And let's say you do that consistently for the next 24 months, and then you have a major accident at work, or even longer, right? We could say 10 years because this is a young person. And then you have a major accident and you're unable to work. Will your mortgage company then allow you to continue to live in that house just because you were able to manage those additional principal payments every month of $2,000? Do you think that once you're not able to make that mortgage payment, you could end up in foreclosure? I guess you all know the answer. Of course, we're like, well, we would end up in foreclosure. Okay, well, if you've got this 3.75% interest rate, but I can show you a way to put your money over here where it can grow with returns of, 8, 10, 12%. Well, then guess what? 10 years down the line, if something happens to you, you've got all this money over here that sat over here and continue to grow and compound and grow and compound, that by the time you have that accident, it won't even matter because you've put $24,000 a year away into an account, receiving returns upwards of 10% versus $2,000 a month onto a mortgage that if you can't pay, they're going to still be happy to take every payment that you made, those additional $10,000, and not to mention the fact that you've only got an interest rate of 3%. Why are you worried about paying that off? See, back in the day when interest rates were 15, 16, 17, 18%, you did want to pay your house off. That was the right mindset. And if you think about it, a lot of our grandparents and an older generation always encouraged us to get those things paid off more quickly because the rates they were paying were higher. They were paying higher interest rates than they were able to grow their money with. But now the reverse is happening. We've got lower rates and better rates of return on the money we're growing. So let's definitely continue to do that. Let's put our money over here where it's growing more quickly. Then we got a great nest egg built up. Something happens. Guess what? It don't matter to us. We don't lose a house. We don't miss a beat. We've got cash savings set aside. And here's the best thing about an index universal life. The growth is tax free. Under the Internal Revenue Code 7702, the government is going to allow you to grow money in this mechanism completely tax free because you've got a death benefit attached to it. That blew my mind. You couple that with the fact that many of the financial servicers have also set this up with a way for you to access it tax free, even in retirement. What are we talking about here? When somebody tells me, let me preface this with this. I never call anybody child's ugly, especially when I was having kids of my own. I definitely would never tell somebody that their baby is ugly. But now that I'm done having kids, your 401k is ugly, cuz. Listen, let's get rid of that 401k that we're paying higher taxes on. Okay, average tax rate for Americans right now is around 13.3%. Why are we deferring our retirement savings into an account that's already being taxed at 20%? And then God forbid that you need it before 59 and a half, because then you're going to pay an additional 10% excise tax. So why are we continuing to follow the herd and set things up for ourselves without truly thinking about it? A lot of people don't know this about their 401k, but you don't even own the account. You are a participant. They ask you to enroll and participate. Etymology is real. It really means you are a participant. So when you are a participant in a 401k, you don't own the account, your employer owns that account. And in the background, you've got a special best friend who's operating silently called the Internal Revenue Service. And they're going to be always ready, waiting to take 20% of your retirement savings, even though you spent your entire working life paying average taxes of 13 to 17%. If you make less than $250,000 a year, you have absolutely no business deferring your retirement savings. Take the hit, pay the lower tax rates that you pay now. A lot of people, you're not if you're not doing max contributions anyway, you can definitely take a loss there. Now, I will step back and take one thing back, because I don't turn down any free money, right? So any dollar for dollar matches that you're receiving from your employer, accept those. That's free money, but only put in what they're going to match you to. And then set up a private pension, an index universal life policy, something for yourself that you own, and put the remainder of your retirement savings in that. Those are just the surface of some of the tips and tools that I'm starting to share with people now, especially when it comes to long-term savings, retirement, and learning how they can actually start to establish a generational wealth and be able to start to set those things up. So I know that I've kind of covered a lot of things in a short little bit, but don't want to go too deep, don't want to go too far. But I definitely want to give everybody the opportunity to get to know the fact that we can do this. We can do this together with our families. We can come together with our friends and our loved ones. Get with your group of best friends. Y'all write y'all a trust. And then go out here and make something happen. Insure everybody, and maybe the trust takes care of everyone's kids. We got a lot of single moms. Nothing could be better, in my opinion, than for that tight group of single moms that's really got one another's backs. Set you guys up a trust, and then get everybody insured and make that trust be the beneficiary. You ain't got to worry about what godmama and goddaddy gonna do if that trust is set up to take care of everybody's kids in the event that something happens to you. Also, put your health directives in there. Those things can protect you when you become incapacitated. I spoke with an attorney not long ago that gave me a little leeway, and I'm gonna just drop this jewel for free. Did you ladies know that without a proper health directive, let's just say that we're single, no family members to speak with us, right? We're vibrant, we want to live, we have a zest for life, but we become in a state where we can't speak and advocate for ourselves, and we are in a hospital. Do you know who decides whether or not you live or die? The hospital board,
Yeah.
the board of that hospital. So if you can't speak for yourself and no one else can speak for you, and you don't have a trust with the health directives in place, you could want to live all you want to. But depending upon what you have going on, if that hospital does not deem your life worthy, and these people don't know you, they don't know what you're about. They don't know what you bring to the world, the joy that you bring to the people around you. You are a number taking up a bed. So, if I can't encourage anybody else to do anything else, please, just start to look into some of these things that I'm talking to you about today. If you have any questions, I see someone did ask for my contact information. Is it okay, ladies, for me to share that? All
Absolutely.
right. Thank you. Thank you. So my email address, of course, and I'm going to drop it right now aloud, is admin, and that's ADMIN at OMARSHARIFSLYINC.com. And I know that's a lot, but that is admin at OmarSharifSlyIncorporated.com. You can also check out my website at legacychangers.org. Hi, Kim. You can also check out my website at, and there's my hubby, y'all. Hey, baby. You can also check out my website, as I mentioned again, at legacychangers.org. And if you want to reach out and give me a call, my phone number is area code 615-479-5890. I would love to talk with you at any time. Let's set up an appointment. Let's get some things going, guys. We can really pull together. And like I said, you've got that strategic group of friends. You guys need some help setting some things up. Let's come together. Let me help you guys. I'm happy to sit down with you via Zoom or in person, if, whatever the case may be, so that we can really work to get things done and start to change our financial trajectory for our kids, our family members, and where we're going as a culture.
Yes. Thank you, Tasha, so much. I know you gave a lot in a short period of time, but I personally advise everyone to give her a call and just let her give you, so you can see it. Because when she started showing me the numbers on the PowerPoint, it blew my mind. Because it was a way that I could come out of retirement and have a life insurance policy, and they give me money when I stop working, all at the same time. Like, it was mind blowing. And also Alicia being able at her age to start hers early, so that she don't have to invest as much as I have to do catch up. But she can start as little as $100 and make a major difference in her life. She
Absolutely.
is in millions. Like, we talk about being a millionaire. How we gonna be a millionaire? Well, it starts with legacy. So please set an appointment with her. Your kids are not too young. I know when my diamond, which is my grandbaby, when my diamonds start coming, I'm going to get them as soon as they come out on this earth. Start them that young, so that when they are that young, I have already been putting this money in their name already. So their name is already valuable. So let's do our part and get in and do some things and turn this world around, so that our percentages are different. Let our kids say something different about us. Just like we say something about our ancestors, how they made a difference for us. Let's let our children say that we made a difference for them. So thank you all. It's 30 minutes, Angela.
I'm sorry. Let Tasha answer this question, because I think a lot of people probably need to know it. Farika was saying, if you have term life policy, can it be changed around?
Well, with your term life policy, it cannot be changed around, but what you can do is actually, if that policy has living benefits attached to it, I would advise that you leave that term policy in place, and here's why. If that term policy has living benefits, let's say terminal, critical, chronic illness, meaning that the death benefit can be accelerated at any time if you run into one of those situations. Say you're diagnosed with cancer, or you have a major car accident that takes you out of work for 90 days or more, or maybe you develop some type of illness that affects you doing two or more of your daily living activities, like bathing yourself, feeding yourself, those kinds of things, your ability to walk. You can have your death benefit accelerated if the term policy has living benefits attached to it. And that will help you cover any long-term medical costs without affecting the money that you set aside for retirement savings into an index universal life policy. So for that reason, I would always advise you to keep the terms in place. As a matter of fact, I kind of refer to it as an income protection tool, because of course, if you are still working and you suffer one of those events, short-term, long-term disability is only going to meet 60% of your income. Well, we all are living off of 100% of our income right now. So leave something there that you can have to take care of that. But in addition to the term, also look into setting up your index universal life policy. You're going to get an additional death benefit. It actually comes with a little living benefit as well. And you're going to be able to have that savings mechanism there, so that you'll have that tax-free growth, 8 to 12% returns, and be able to access it tax-free in retirement.
Great, great, great information, Tasha. I know it's a couple of people who are going to definitely benefit by being in touch with you. And I know we have pulled it up. Farika, shout out to you. You were doing a great job on the back end of being an admin. So she put all the information in there. I asked a couple of questions. You want to know what the email was. That is it again. So make sure you get that. And then they want to know the phone number again, which is here. So y'all make sure, because like Tasha said, at the end of the day, we are looking to build a legacy. We are looking to change our futures for our families and children's and future generations. And so if this is a product or service that we can utilize to do so, then it's time to make some different decisions. And, we say We want to do better, but then we don't make the choice to do better. So Tasha, thank you. We'll definitely have you back on because I see that I believe, who was it in here? Chantel, she had mentioned about, more information. She's learning more about trust. And so we would definitely, maybe want to have you come back on to break something down about that. So this is a world of opportunities for people. Gems have been dropped. Make sure you go back. Some of this you may have to listen to the replay again just so you can get in your spirit so you know what to ask somebody when you go and talk. But let's make a conscious decision, y'all, to do better because 6 hours of money in our community is unacceptable. Period.
Period.
So
And that's
we gotta do
empowerment.
better.
Another day of empowerment.
Absolutely.
Yes.
Come on now.
Absolutely.
Yeah.
Y'all see
It
what we're
is.
doing over here?
Exactly.
Yes.
Changing, helping us change our lives, being empowered enough to make decisions where you see something different than what you've seen before. And it's not just for everybody. When they say God is no respecter of people, same thing for other institutions and things. Just because you see another culture that's doing well doesn't mean we can't do the same thing. We just have to position ourselves to make it happen. We can do just like they did. We have the
Mm-hmm.
same opportunities. So let's not just keep sitting back and putting our money out there and helping everybody else do something and we're not doing it for us.
Yeah.
So thank you so much, Tasha, for sharing. Demetrius, everybody said Miss Doris is needed. Thank you. We appreciate it because I'm telling you, this can be a game changer for real. So,
Yeah.
Sparkle, I guess, end us on out with everything, and we're gonna bring Tasha back.
We are gonna bring Tasha back,
Yeah,
and
we need
you
another
know
one.
we
We need
we
another
never
one.
bring nobody in once. We like the
Right.
double. We believe in doubles
Oh,
around
thank
here.
y'all so much. We can
Yes.
bring me back and we can do the mortgage forum too. A lot of people
Oh,
still definitely want to get homes, and there's a lot that goes on behind the scenes that you don't realize with your mortgage application. So let me help you
Tasha,
guys.
don't mess around and be a monthly regular.
I know, right?
Hey, that's all right with me. That is okay with me. Trust.
I'm I'm telling you, she's in
I'm
safe
telling you.
hands. God gave her this assignment to wisdom. He gave her the intelligence to be able to
Yes.
observe it and then be able to give
Exactly.
it to you. Everybody can't read the book and understand exactly what the book says, but God gives people that can be able to explain it where you can understand it and make it benefit for your life. So,
Yes.
of course, we are out
Oh,
of time. One more
I'm
time.
sorry. I know we out of town. One question, Tasha, just because I know somebody put in here when Sparkle said her daughter can do it for $100. Can you put it into perspective? Because as you age, that becomes different. And so I just want to give somebody, I don't want nobody to be hyped up and think like, oh, let me drop a hundred on it. We're gonna do something.
Right. Absolutely. You can start as low as $100 a month, but you're definitely going to want to increase that as you go on. So maybe you do a year or 2 years at $100 a month. Then you want to start to increase that up to 300, 500, 1,000, whatever is comfortable, right? You don't want to put yourself in a hardship trying to do this and save for your retirement and not be able to eat today. You want to make it to retirement. So absolutely. But for younger, first of all, kids 15 days old can have an IUL. Start when that baby
Mm.
is 15 days old. If
My
somebody
daughter's gonna have
told
it.
me that my child could have been a
Mm.
millionaire by the time that they were 40, I absolutely, and I can start for $50 a month when they're 15 days old, because of course their cost of insurance is nil. You got a brand new healthy baby. You don't have all that health stuff that you have going on with other people. Yes, and no more GoFundMe accounts. Speaking of, what if I told y'all there is it builds a small amount of cash value. But did y'all know there is a whole life policy that exists out there, operates as a funeral concierge service, and pays out 48 hours from the time of death? You don't even have to wait for the death certificate.
Come on now.
Girl.
Why? Why are we fish frying and GoFunding? and,
Hey, that's what
and
the husband said. No more fish fries, baby. No more
no
fish fries.
more.
No more. I'm
Why would
telling
we
you.
continue to do this?
So yes, everyone, we are rebooking Tasha. I promise you, we are going to rebook her because this knowledge is very valuable. And when are we going to start? Now. We're saying we're becoming better. Be what you want to see. In order to be what you want to see, you have to make some different decisions. And when I tell myself, instead of buying a pair of shoes, invest in your life so that somebody
I
can
was
live
just
better
gonna say,
later.
instead of buying them children Jordans and all these other things, baby, give them a policy so that they can live and have good things that happen in their future.
Listen, and I'm gonna tell you something else. If you're a business owner and you haven't hired your child yet to reduce your own personal taxation, maybe we need to talk about that at another time.
Tasha, don't mess around and be back here.
Right.
Look, once a week, Tasha coming on the program.
I'm telling
else
you.
come on the show but Tasha.
Exactly. But we're going to get out of here because we know everybody has to go to work and do great things so that you can pay, go ahead and get these kids these trust and life insurance and retirements and all that crazy stuff. So Tasha, we do with all of our heart, we truly appreciate you for coming, taking out time. Your special hubby, we thank you for tuning in to support it. I love to see couples do things together. It does something for me because that's how it's supposed to be. So if all minds are clear, no, I know it's not completely clear, but we still gotta go. Okay, so I'm gonna pray. Reverend Pat, I know we probably went into some of your time. We do apologize, but go ahead and follow Reverend Pat as she go ahead and encourage you more. So I'm going to say a prayer, and then you all go out and have an amazing day because you deserve amazing because you are a child of the King. Dear Heavenly Father, we thank you for this day. We thank you for your blessings. We thank you for allowing Tasha to come and be a vessel for us, God. We pray right now that she overflow, God, that her books are overflowed with appointments, God. We thank you. We adore you. It's in Jesus' name we pray. Amen. Have a blessed day. Love y'all.
This year will be my year. This year will be my year. I claim it. I really believe it in my heart. This year will be my year. I claim it. Yeah. I claim it, 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 yeah, yeah. I claim it, 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 hey. Yeah, I claim it, I claim it, yeah, yeah. I claim it, I claim it, hey.
What's up, family? It's your girl, Terry Y. Hicks, 1/5 of the amazing queens of empowerment from the Empowered Morning Show. And I am here to personally invite you to join us for the premiere of our brand new show, Queendom Behavior. That's right, we have a brand new show coming out. And before the world gets to see it, we want you to see it. So join us April 27th at 8 p.m. in Douglasville, Georgia at Studio T on Chapel Hill Road for the premiere of Queendom Behavior. It's a red carpet event, so make sure you dress for the occasion. We can't wait to see you there.